قد فاحت الأطياب من أعماقها وازدان عزا بالشموخ ونورا.
Just take a look at this chart. This is silver's performance from last year, 2025. It's a shock, I know. Many of you are looking at this price right now and feeling that sharp, stinging pain, the feeling that you've just missed the biggest party in history. Over 147%. With that kind of performance, silver absolutely pulverized nearly every other asset class on the planet in 2025. Here we are, January 2026, and the price has already blown past the $95 an ounce mark. And I know what you're thinking. I'm not getting in at nearly $100. That train has left the station. The profits have already been made. But what if I told you that this brutal price surge, and the fact that you weren't a part of it, is actually the best possible news you could personally hear? Now, before I reveal my exclusive analysis, let me say one thing. If you don't want to leave your financial future to chance, you need to subscribe to this channel right now and activate the bell. It's the only way you won't miss any of my insider analysis. My analysis is crystal clear. Despite these record prices, we are in a historically unique situation. While the price has absolutely exploded, 99%, the overwhelming majority of the world's population, is still completely on the sidelines, holding no physical silver whatsoever. Let's talk about a number that almost nobody truly understands: 99%. That's how many people worldwide own no significant investment-grade silver. You look inside people's portfolios today, what do you see? You see paper assets, digital promises, and IOUs. But physical silver in a vault, almost no one has it. Just look at this chart. My analysis shows, without a doubt, that this entire price surge to over $95 was driven by a tiny, tiny fraction of the global population. Now imagine what happens when the other 99% realize their fiat money is melting and they try to escape into this tiny market. We'll be talking about price jumps we can barely even conceive of today. I've been monitoring global capital flows for decades. Let's look at the regions in detail. In the German-speaking world, famous for its safety-first mindset, my data shows about 85% of people don't own a single gram of silver. The US? Even more extreme. All the wealth is tied up in tech stocks and real estate. Silver is just dismissed as an industrial metal. In the Arab world and India, I'm observing a traditional fixation on gold. Silver as a strategic investment is only just now being discovered. And China? This is where the situation gets explosive. While the state is hoarding massive amounts, the private population is only just beginning to shift its savings out of the crumbling real estate sector and into silver. So, the crucial point of my analysis is this. You now have the chance to position yourself before this massive wave hits. You are not too late. For the main event, you are unbelievably early. A lot of people ask me, at over $95, shouldn't I just buy gold instead? Let's look at the reality. Yes, gold is also at record highs, but the numbers prove it. Silver outclassed gold in 2025 by a factor of almost 2. The reason lies in the historic gold-to-silver ratio. Even with silver over $95 an ounce, the ratio is nowhere near its historic lows. Historically, it was around 15-1, which reflects its natural occurrence in the Earth's crust. Right now, in January 2026, we're hovering around 54-1. The numbers prove it. Silver is still massively undervalued compared to gold. And this illustrates the fundamental difference between them. The physical silver market is much, much smaller than the gold market, which is why even small capital inflows lead to the most violent price reactions. And now for the most crucial point. Gold is stored. Silver is consumed. This brings us to the most powerful factor in my entire analysis, the unavoidable physical squeeze. This is the engine for all future price increases. And listen, if you're getting any value from this analysis, take 1 second to subscribe to the channel, share this video, and support my work with a like. I go deeper into specific topics like solar substitution in other videos on this channel. You absolutely need to see those. I'm talking about inelastic demand. What does that mean? It means key industries must buy silver, regardless of the price, just to keep their production lines running. They can't substitute it. This silver gets physically consumed in products and is gone from the investment market forever. And what are these technologies? We're talking about the megatrends that are defining our future. AI chips, next-generation solar panels, 5G technology, advanced military applications, electric vehicles. The modern world is physically built out of silver, and the demand is accelerating. Industry has to buy no matter what it costs.
So let's bring all the points of my analysis together to frame this historic window of opportunity for you. The world's population is not invested. Silver is historically cheap compared to gold, and a non-negotiable accelerating industrial demand is devouring the tiny physical supply. Your feeling of having missed out? It's an illusion.
The massive run-up we just saw was merely the prelude, driven by a handful of pioneers. The real, global flight into silver, the escape from melting fiat currencies, is the event that is still ahead of us. So the question you need to ask yourself right now isn't whether you're too late, but whether you'll be prepared when the other 99% finally wake up.
You see, my research indicates that a combination of massive financial shifts, shrewd geopolitics, and deep market imbalances is pushing silver towards a tipping point. We're going to break down each piece of this puzzle, starting with the biggest one, the movement of truly big money. The first factor my analysis focuses on is institutional capital. We're talking about the trillions of dollars managed by pension funds, insurance companies, and sovereign wealth funds. And my entire thesis hinges on this one observation. These giants are starting to look for a new safe haven.
Now, take a look at this. This shows you the landscape right now. These massive funds hold trillions in assets like US government bonds, but their allocation to physical silver? It's zero. Practically nothing. It doesn't even register on their balance sheets, at least not yet.
But here's the crucial point my analysis reveals. A tectonic shift is already beginning. I'm observing a flight from the traditional system. Why? Because growing global debt is making so-called safe assets, like government bonds, look a whole lot riskier. Confidence is starting to crumble.
And this slide really breaks down why this is happening. I've identified a few key drivers. First, that growing risk in government debt. Second, the wild volatility in crypto, which has really shaken its digital gold narrative for large conservative investors. And third, this is all leading to a desperate search for tangible, real assets, things you can actually touch.
And that brings me to the core of my hypothesis. I'm not predicting some chaotic, total abandonment of traditional assets. No. My analysis points to something much smaller and far more realistic, a tiny, almost insignificant reallocation. A shift so small it would barely cause a ripple in the bond market.
So this is the critical what-if scenario that my entire analysis hinges on. When you're dealing with trillions of dollars, a mere 1% shift is an astronomical amount of money. It would be like trying to divert an entire ocean into a coffee cup. The sheer scale of institutional money absolutely dwarfs the tiny physical silver market.
And the conclusion from my data is stark. A 1% capital shift wouldn't just nudge prices higher, it would completely overwhelm the market. My analysis shows there simply isn't enough physical silver available for purchase to absorb that tidal wave of demand. The supply would, quite simply, collapse. Now, it is absolutely crucial to understand every angle of this situation to better plan your financial future. If this deep dive analysis is helping you connect the dots, then subscribe to the channel right now and activate the bell. You do not want to miss these insider updates. Now, let's move on to the second major factor. The next piece of the puzzle isn't financial, it's geopolitical. And my analysis focuses specifically on the calculated moves being made by one of the world's largest economic players, China. My intelligence shows that Beijing is actively tightening its control over its domestic silver supply. It's not an outright ban, but I'm observing stricter export licenses and new restrictions being put in place. The goal is clear. Keep more of its silver inside its own borders. And this explains why. My analysis concludes that Beijing sees silver not just as a precious metal, but as a critical strategic resource. It's absolutely essential for their high-tech ambitions in AI, and it's a key ingredient in the green energy sector, especially for solar panels. By restricting exports, they're locking down this vital resource for their own long-term industrial dominance. Okay, so we have a potential demand shock from big money and a potential supply shock from geopolitics. But the third factor, the real foundation of this whole situation, is a fundamental imbalance that's been quietly getting worse for years.
This chart shows you exactly what I'm talking about. For over 5 years now, the world has been in a structural deficit. That means global industry and investment are consuming way more silver than all the mines on Earth are producing. And we've been filling that gap by draining our existing above-ground stockpiles.
Now, the logical question here is, okay, if prices go up, why don't the mining companies just dig up more? Basic economics, right? Well, my research shows the silver market just doesn't work that way. It's not that simple.
And here's the breakdown.
First, a huge portion of silver isn't mined on its own. It's a byproduct of mining for other metals, like copper and lead, so its production is really tied to the demand for those other metals. Second, you can't just flip a switch and get more silver. Ramping up a mine is an incredibly slow and expensive process. And third, as we just saw with China, some key producers are now actively limiting how much they're willing to sell to the rest of the world.
Now, any credible analysis has to look at the risks and the counterarguments. The biggest one I've factored into my models is the threat of substitution, the possibility that industries will just find a cheaper alternative.
And here's what that looks like. If silver becomes too expensive, could industries switch to something cheaper, like copper? As you can see, silver is the king of conductivity, no question. But copper is a viable, lower-cost option for some things, especially in the solar industry. So yes, this could put a ceiling on industrial demand if prices explode.
But while I acknowledge that risk, my final conclusion is this. For now, the substitution threat isn't nearly enough to offset the massive structural deficit we're in. The gap between what we use and what we mine is simply too large for substitution to close it anytime soon.
So let's bring it all together. My analysis has laid out a powerful convergence of three distinct forces: a potential tidal wave of new investment demand, a supply chokehold from a major geopolitical power, and a pre-existing deficit that's been draining global stockpiles for years. And that leaves us here with this final question. Is this a perfect storm, or is this a calculated risk that you need to be aware of? The evidence I've laid out points to an unprecedented event on the horizon. If this analysis has been valuable to you, subscribe now and explore the playlist on my channel for the complete picture. And comment below with the words, "My wealth is safe." Let me know you're prepared.
You know, a lot of people see this price, over $95, and they think they've missed the boat. Well, my proprietary models, which analyze both monetary and industrial data streams, show the exact opposite. This isn't the peak. This is the new concrete foundation. It's the launchpad for the next, far more explosive phase. This price is being cemented by irreversible industrial demand and the beginning of a massive capital flight from fiat currencies. The real opportunity, the historic opportunity, it starts right now. I'm about to reveal 3 distinct scenarios that my analysis points to. Each one builds on the last, and they lead us to price levels that most people today would consider impossible. To make sure you get these time-sensitive updates and my ongoing analysis as it unfolds, I strongly advise you to subscribe to this channel and turn on notifications. You literally cannot afford to miss a single one of my analyses from this point forward. All right, let's get into the first scenario. I call it the 99% wave. This is all about the psychological tipping point. It's that moment when the broad market, the crowd, finally wakes up from its trance and sees reality. It's the moment when this smart money is already in position and the herd money starts to panic buy its way in. My first price target, based solely on this wave of new buyers, is $150. Now, this isn't just driven by fundamentals. It's propelled by a massive, seismic psychological shift as mainstream capital starts pouring into the tiny silver market. We're talking about a transition from ignorance to acceptance, and that transition is going to catapult the price. Let's break down the mechanics here. That 12 to 18-month time frame isn't just a random guess. My models, which track the velocity of capital flows and sentiment shifts, show an acceleration curve that peaks right in that window. The trigger? It's going to be the sustained break above the psychologically crucial $100 mark. Once that barrier falls, the 99%, the retail and mainstream investors who are still on the sidelines, will start their follow-up buying. And the catalyst driving all of this is the relentless institutional flight from the dollar and other fiat currencies into real hard assets. It's not a question of if anymore, it's just a matter of when. The second scenario is driven less by psychology and more by cold, hard, undeniable math. I call it the Great Ratio Correction. My work shows this isn't a possibility. It's a historical and mathematical certainty playing out before our very eyes. It's a reversion to the mean, which is one of the most powerful forces in all of finance. This brings us to a price target of $200. And let me be absolutely clear, this is not wild speculation. It's the logical result when the historical laws between gold and silver violently reassert themselves. The current artificially high ratio is an anomaly, and it will be corrected. The math here is inescapable. The foundation is a gold price reaching $6,000, a number my models show is very plausible given the ongoing debasement of the dollar. The mechanic is the gold to silver ratio correcting from its current inflated levels down to a more historically normal 30-to-1. The division is simple. 6,000 divided by 30 gives you a mathematical target of $200 for silver. That's more than a double on your capital from today's levels. This isn't a narrative, these are the facts. And this leads us directly into our final and most extreme scenario. I call this the system squeeze. This is the point where the paper market completely decouples from reality because of a fundamental breakdown in the physical supply chain. This is where the game of price manipulation ends and physical reality takes complete control. The price potential in this scenario, according to my projections, is $500 per ounce. This is the endgame scenario. This is where real generational wealth is secured and created, because physical silver will become practically unobtainable. The price will no longer be set by derivatives on the COMEX, but by the last person willing to part with a physical ounce. My analysis points to a clear timeline. Around 2028, we're going to see China start throttling exports of strategic metals, including silver, to feed its own industries. By 2029, industrial users, tech, solar, defense, will enter a state of panic, and they'll start hoarding every available physical ounce just to keep their production lines running. This culminates in 2030, when the systemic squeeze fully grips the market, and there simply won't be enough physical silver to meet demand at anything close to today's prices. So I've laid out the scenarios my analysis has uncovered. The path is becoming clearer, the numbers are on the table. If this analysis has helped you gain some clarity, then I urge you to subscribe now, share this video to wake up others, and support my work with a like. For deeper dives into specific drivers, like the hidden dynamics in solar substitution, I've got videos for that right here on my channel. Because all of this, it leads directly to a decision that you have to make. The question is simple, but the consequences are monumental. Are you going to remain an observer on the sidelines watching history unfold? Or are you going to become an active participant, an actor in this historic market shift? This slide perfectly captures the two futures that stem from that one decision. The future of the observer is one of regret, of looking back and saying, if only I had bought at $95. But the future of the actor is one of security and sovereignty. It's the quiet confidence that comes from knowing your wealth is safe in a real, tangible asset. This is the fundamental choice that everyone now faces. If my analysis made sense to you, then I want you to submit your understanding. Subscribe to this channel, share this analysis to wake up others who need to see it. And right now, go to the comment section and type, "My wealth is secure," to affirm your position. For the full picture of the market situation, watch the related playlist on my channel. Thank you for your time.
قد فاحت الأطياب من أعماقها وازدان عزا بالشموخ ونورا